Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was looking at some charts, and that's kind of what I do. That's where I get my enjoyment. It's kind of like reading a book almost. And I've got some charts behind me, and I always look for this, basically charts that are similar. I've got a bunch of similar charts and downtrends being broken. But there's a couple of things I wanted to share with everybody, just some similarities that I see. So you're going to lose me here. And I was looking at AMC Entertainment just for the heck of it. And the pattern here looks very similar to uranium, where it comes on down and then you get this. I put a line here where it went from a downtrend to an uptrend, downtrend to an uptrend. And it's got this double hump, these little double humps, and then this thing usually takes off. Like this thing's ready to go. And I'm not suggesting to go into AMC. Crude oil has the same chart pattern. Basically came on down. It ended here. We came on up. I took the COVID crash out. I just kind of said, no, this isn't a bottom. And then we're heading on higher, and we're above, we broke the downtrend line, and we're doing a little back test, retest. Platinum's got the same thing going on. Here's the downtrend line. It kind of ended here, and we've been moving sideways since and broke its downtrend and doing a retest. Last time it did this retest, which is back here, it launched from it. So I'm guessing a launch is right in front of us. Uranium looks like it wants to launch. Oil looks like it wants to launch. And platinum looks like it wants to launch. And AMC looks like it wants to launch. These all look very good from a charting perspective. Now, I've charted some more stuff here. This is the gold to monetary base, the 10-year treasury yield, the US dollar index, and the gold price. And I've got these up here. When this breaks the upper channel, the upper trend line of this descending wedge, which we already did, we already broke it, we're back testing. When this starts to account for the monetary base, we are going to see a massive move in the gold price. I mean, massive. This thing's going to run all the way, probably to maybe even 10,000 or 20,000, depending on where this goes. The 10-year treasury yield is the thing that's going to do that. And this is it right here. And we've got this trend line here. And we broke out in middle of 2016, probably 2018, 2017, somewhere in that range. We came back. We hit the bottom of this channel here. And we broke up. We're doing a retest right now. If this launches higher, guys, we are in a new 10-year treasury yield bull market, which means that we are going to be moving higher in interest rates, which means that rotation of money is going to happen, just like this right here. I am suspecting that this could potentially come in front of us of an increasing interest rate environment, which is going to rotate money out of stocks and bonds and into commodities and precious metals. If this is true, and we've already broken to the upside here, if that's true, then this gold to monetary base is going to revalue itself, because in the 60s, really when this thing started to come up, it was in the 70s to 1980, which is this point here, 1970, we rocketed higher. Gold accounted for it. So yes, we're probably a little bit early, but it's coming. And this revaluation occurs. Here's 2000 to 2008, a revaluation here, a small one, inside of this, basically the pattern. This is telling us that a huge one could come, a huge revaluation of gold against the monetary base, which would be a huge commodities bull market and a huge bull market in precious metals. Now, if that's the case, that means the dollar would potentially fall. And we're carving out this gigantic pattern in the dollar. And we're coming on up in basically a wedge type pattern that's starting to wedge up. And if this was a false breakout above this pattern here, and then we come all the way back down to the bottom, that would be around 85. last bull market from 2000, we went from 2000 down to 2008, down to 85 from 113 or 12, something like that. What if we break to the downside of this and break the lower end of this and we go way down here? That's a potential, because we are coming to a point, or a wedge point up here, where I don't think we're going to go higher. I don't see that happening. Not with real estate in an expansion phase and how messed up we are with real estate. We have to have a weaker dollar, I would suspect. But this is an index which is against another basket of currencies, which is also devaluing their dollars quite rapidly. So maybe we just go back over here in this huge devaluation of fiat currency paper world. Now the gold price is right here. We created this pattern, broke to the upside, and we're creating a cup and handle pattern right now, which is a continuation pattern. So I suspect this to go up quite a bit. How much, we'll find out. But if this is going to revalue itself, it's going to go up massively if it goes anywhere near where it was up here. Just a massive revaluation. Now here's the gold price, upper left, the XAU to gold ratio, the Huey to gold ratio, and the platinum price. I just grabbed some stuff here. If we think that the gold price is going to go far higher, we should be seeing these ratios of gold mining stocks to gold starting to turn upward. Well, guess what we see in the XAU to gold ratio? It's broken its descending wedge pattern and broke to the upside of this little downtrend just recently. And I bet you we're going to see this thing start to move higher. This is, like, in my opinion, the perfect time to buy gold mining stocks, which is very rare in history, is right here. We were in a decline from 2000 to 2008. It basically just went sideways. It didn't really even go anywhere. But now we've broken the descending wedge to the upside. We had a little kind of pullback. We broke that, and now it's free to go. So, I mean, I am heavily loaded in gold mining and royalty precious metal type companies. I think their time in the sun is coming at any point. Same with the Huey to gold ratio. We've got the descending wedge pattern that broke in 2015 and 2016. It broke to the upside and it went sideways for a little bit. And I think we're just ready to hopefully rip it higher at some point. We just got to break out of this little pattern. In the platinum price, you can see the same. They broke out and then did this kind of rollover thing. It broke out and did this rollover thing to backtest, retest. I think right now I'm a buyer here. I'm a huge buyer of platinum right here, physical platinum. Now I'm going to look at some of these commodities as a whole. Here I've got lumber in the upper left. Lumber broke its downtrend, and you can see this thing rapidly going higher now. 11% last trading day, just a launch higher. So basically, if you take a big picture view, and I don't have the big picture view here, it broke out, it ran, it came all the way back and back tested, and now we're breaking out again. Just a massive move. And all these people who think, oh, lumber is going to go down, lumber is a leading indicator. Well, the indicator is telling you that massive inflation's coming now. I think this was a supply-demand imbalance of the reason why it went up, and we have a huge, basically a huge demand for lumber with housing starts. Yes, it came on back down, went through a little bear market here, a pullback, and now it's launching higher. Copper looks like it wants to launch higher as well. We're about to break to the upside here at any second right here. We're right there. And I've been buying all of my favorite commodity type companies. I've been buying all of them, and copper's about to go. West Texas Intermediate Crude's about to go, I think. We're lining up. We got a nice little bullish engulfing here. Small little down day. When we break through here, it's gonna go. Natural gas is gone. It's already moving higher. All of these patterns look good. Gold, if you draw the line here, you hit this high, you cut off this top, you draw these two couple points in here, we've already broken to the upside. This I think it's time, it's go time. And no one's even paying attention. Silver looks like it's go time. Broken downtrend line, ready to go. And here's the CRB index. That does not look like it's a deflationary period. It looks like it's massively inflationary that's coming in front of us. That's why this index continues to go up. And platinum broke its downtrend line here recently as well, to the upside. Now, looking at energy, I've got a thing here. This is energy prices. The kind of orangish line is uranium. Natural gas is black. Coal is green. And crude oil is light blue. If you look at the last commodity bull market, we would have been buyers in the 1998, 1999 area, which is down here. Massive lows. We had uranium and oil down 49%, 43%. Those are massive. $11 for crude and $8.49 for uranium is where I would have been a massive buyer. Now, a lot of people say that uranium doesn't follow the commodity complex. Well, I hate to tell you, but it sure does look like that to me. It sure looks like it's a good inflation hedge against a declining dollar. Now, at the peak here, and uranium looks like it goes massively, it was up 706%. But that was off of the low, which was down 50%, which means it actually went up 1,400%, which is just massive. And oil did another similar thing. It was up, oh, that's natural gas. Natural gas was up 652%. And crude oil was up, I have to go here, 567-ish. They all went up roughly the same amount. Very, very close. Natural gas probably peaking the most. Coal was also a very good winner, but it also came from an area that wasn't as low. So the biggest winner of last bull market was uranium was number one. Natural gas was a close, very, very close second. Yep, natural gas was very close second. Oil was also on the heels of that. So oil and natural gas were very close to uranium. Uranium was number one, and coal also did very well. So the entire energy complex, I would say, did very well. Now, if you look at this, oil did absolutely horrible in 2020. It went basically negative. And look at what it's doing now. It is launching higher. And uranium is slightly delayed, just like it was back here. Because if you look, in 98, oil, gold, and natural gas took off. They took off first, and they stayed ahead of uranium until uranium just went vertical. It's the same thing over here. Oil and natural gas they're taking off. Same with coal. And uranium, I think it's just lagged behind it. You're going to see uranium probably really start to take off here. So I think big moves are ahead of us for energy. And I wanted to go over all this because I feel like we're right on the precipice of like the beginning of a very big move in all these commodities. I feel like inflation's right in front of us. We're breaking these downtrends. Uranium's starting to take off. Oil looks like it could potentially take off once it breaks its downtrend. And looking at the other patterns, silver, gold, platinum, copper, they all look good to me. And what I'm doing is, if I have any money left, I'm going to deploy it and buy my favorite, basically, precious metals companies, because I think this is probably going to be one of the last times to buy at these types of levels. I feel like people are hating on it right now. I don't see too many people talking about gold or silver. And if I can get some equities, some royalty companies still incredibly cheap, I'm going to lock them in now, I think. For me. It's not advice. That's just my financial opinion. and the charts all look really good to me. So I'll just continue to cost average in, get my shares, and then wait to see what happens. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.